Hey there, it's David Bartels with Everhome Realty. I want to give you another market update. This one is really about what to expect in housing for the rest of 2022 and into 2023. There's a lot of misinformation out there in the markets. If you're looking at headlines, it can be really confusing. Here's one. Home sales are expected to fall 16.2%. All right, that means house sales are going to go from a record high 6.1 million to 5.1 million houses this year. And that may sound like a big deal because 5.1 million is a long way from 6.1 million, but before 2020, you got to go all the way back to 1995 to see 5.1 million transactions. Relatively speaking, we are still seeing a lot of transactions. Now, it slowed because of mortgage rates. Mortgage rates went from 2.8, 2.9%, all the way up to 5.2% in a blink. That caused buyers to take a collective breath, but now the markets are settling down. Rates are expected to continue to drift down. More people are getting adjustable rate mortgages, but waiting for interest rates to get back to 3% is kind of like waiting for gas to get back to $2 a gallon. There's just not much reason to expect that that's going to happen. The fact is, these 3% interest rates that we saw were a very short-term gift that we're not likely to see again in our lifetime. What is happening, what is real, is the annual home price appreciation is cooling. That doesn't mean prices are coming down. That just means the rate of price appreciation is cooling down. We peaked in Q1 of 2022 at 20.5% year over year. And since then, we're seeing these prices come down. But this just means in Q3 that it's expected that house prices are still 17.4% ahead of last year. It also means that the prices still went up, okay? And they're going to continue to go up. It's expected that price appreciation by the end of 2023 is still going to be 4.4%. Average is 2 to 3%. Okay, so you didn't miss the top. Prices are still going up. Okay, but they're just going to go up a little more modestly than they have. And here's some perspective, and that is the last time we had a double-digit price increase like we've seen the last couple of years, it was followed by 7 years of single-digit price increases. And so having multiple years of double-digit price appreciation is very unusual, and it's not something we should expect to have persisted. Bottom line, prices are still appreciating. And the reason prices are still appreciating is inventory. You can see inventory is still hovering around all-time lows. The lower the inventory got, the faster the home prices appreciated. We are still at a very low level of housing inventory. There's still more buyers than there are sellers, and we're seeing prices continue to appreciate as a result. You probably don't even know that during the peak in July of 2021, 45% of houses were selling in the first 2 weeks. It's still 38%. 38% of homes were getting an offer that was accepted in 1 week back in July of 2021. This year it's 26%. Days on market have gone just from 20 days a year ago to 22 days. The market is still hot. If you compared this to 3 or 4 years ago, these numbers are ridiculous, okay? What we are seeing is fewer offers. This is good for buyers. We're seeing fewer offers per property. It's cooled down quite dramatically if you just look at it from May to July. In May, we were getting 4.2 offers per listing, and now we're seeing 2.8 offers now. But 39% of houses are still selling over asking price. And what we know from this is that we know that a properly priced house is still selling fast and with multiple offers. There's plenty of demand for homes that are properly priced. So if you want to understand what the value of your home is, or you want to see an effective strategy for getting your home sold fast and for top dollar, we'd love to chat with you. We've got programs that'll help you sell your house for as low as $4,950. And if you're a buyer, you can buy with us and get a cashback rebate. Learn more at everhome.io. We're here to serve you. Hope this was helpful. Thanks.